Good afternoon, everyone. This is Sam Tucker joining from Perfect Group, and I'm sorry for a delay. We will quickly get started. Just 1 second, I had some technical difficulty. Again, this is Sam Tucker, Group CEO, Perfect Group of Companies, and I appreciate everyone joining this afternoon. We're going to quickly share the presentation. We had some technical challenges, so I'm sorry for the delayed start by a minute. So today, the agenda of the webinar is what to do things in this market space, how you can get double-digit returns on investments you make. What are the options and opportunities? What do you infer from the stock market today? What do you do with the stock market today? Should you, hold? Should you play the stock market the way you see and read the fluctuations every day? Should you wait for the election? Or should you do it, before the election? So we're going to discuss a lot of exciting stuff. We would also be discussing the opportunities, how, in this current market space, what are the alternative options and choices we have? Can we technically do, what is hedging against the fluctuations in the stock market? And is real estate the hedging? Is alternative assets the hedging? What really makes a difference? So we'll be discussing a lot of exciting stuff. Anyone who has just recently joined, I am Sam Tucker, CEO of Perfect Group of Companies. Perfect Group of Companies is diversified business conglomerate with interest in real estate, media, entertainment, and also into many other forms of businesses. So we'll be discussing for a lot of exciting stuff. We'll also be discussing how to use this market. And if anyone has any questions through this webinar, I strongly recommend use the Q&A section or the chat section to ask us question. And what I would try to do is along the webinar, I would technically keep answering those questions to everyone. Just 1 second, I'm going to put up, pause for a second while my PowerPoint is acting a little weird. So to get started. At the same time, I would also recommend that once we have taken you through this webinar, if you have any follow-up questions, feel free to call us, ask us. We have experts who are available even today on the weekend to discuss this with you. At the same time, if you have any technical questions related to this thing, I would also be giving out my phone number and email address to technically send questions to us and be able to get clarification and answers for them themselves. So I'd like to get started without delay. I hope everyone is able to see my screen. So you should see right now Perfect Group of Business icon on the screen, and we would like to get started without delay today. So Perfect Group originally started business in 2002. Today, Perfect Group was named as one of the fastest growing small business by US Chamber of Commerce. At the same time, Perfect Group was also nominated and won 2 prestigious awards by Inc. 5000 magazine as one of the fastest growing company in 2016 and 2020. So today, Perfect Group of companies have technically grown at a pace which is much faster. And originally, if you really see, Perfect Group of companies started the business as a small home office firm, and they still have grown substantially because of constantly innovating, constantly creating ideas which solve problem and solutions, and also look at things beyond this, that how they can technically help people maximize their value and maximize their benefits. At the same time, today Perfect Group of Business has 3 different areas and verticals of the business, which includes the media and entertainment, hospitality, real estate, tax and financial consulting. In media and entertainment space, perfect group of companies have grown into the space of, they have radio channels, movie theaters, they have, entertainment businesses beyond Dallas. We have radio channels today in, perfect group of business acts under a brand of Furniture Network, which has multiple brands underneath it. And Furniture Network today expands beyond Dallas, has listeners all over the world. Perfect, Furniture Network has business listeners and viewers in 180 countries. We have, digital presence in, broadcast presence in Dubai, UAE, at the same time we have in Raleigh Durham, and we have clients all over US. We technically also are expanding our theater and food and entertainment brand, and we are also expanding a concerts and events brand. So in last 3 years, Furniture Network has become world's largest South Asian media and entertainment company. As far as the there is some problem with screen sharing. I hope there is you guys are able to see the screen. If you are not, if you're able to see the screen, please someone type the message in the chat window so I know that you are able to see the screen. Again, there has been constant technical difficulties, so again I apologize for the inconvenience, but let me know if you are able to see the screen of perfect group of business on there. So you're not able to see. Lee just messaged me. Lee, are you able to see it now? How about Lee now? Are you able to see that now? Okay, thank you. Thanks, Lee. So this just gives you a little bit of an idea that, as I told you earlier, Perfect Group is technically expanded into, has become world's largest South Asian radio and entertainment brand. In US, we have 104.9, 95.5 FM in 11:10 a.m. In the radio station business, we have operations in US, Raleigh, Durham, Baltimore, Atlanta, Columbus, Cleveland, and St. Louis. In UAE, we have 3 different brands. We provide, last year digitally, our content was streamed for more than 10 million hours. Today, we are in the process of expanding theater and family entertainment center brand, where each of the theater entertainment brand would be expanded into hybrid bowling, arcade, gaming, laser tag, fun, family entertainment centers, which includes the movie theater along with some of those options. FEC and food entertainment business, FEC typically houses 4 to 5 businesses under one roof, including business. Compared to a traditional bowling alley, FEC makes 3 times more revenue. Bowling is overall a $10 billion industry, and we currently own 4 restaurants and are planning to expand to over 100 restaurants by 2024. Again, gives you a little bit of synopsis of the different verticals. In 2010, Perfect Group diversified with an intent to expand into real estate business with a focus on rapidly growing real estate development segment, and to better serve other accredited investors. We have undertaken various projects with high value investors, and we have helped grow some of those projects today. A lot of people ask me question that why you chose Fort Worth and Dallas Fort Worth as a primary growing area. So what, Dallas Fort Worth is a very interesting area. And for a lot of people who are trying to expand their own business or their own plan to invest, I always say that Dallas is one of the very phenomenal market space. It is one of the top 10 largest job gaining market areas, metropolitan areas from 2016 to 2017. It is number 1 job growth rate, and this is the numbers as of December. It has one of the lowest unemployment rate. It is a tax-free state. It has headquarters to more than 40 plus Fortune 500 companies. It has 20,000 plus new employees which are relocating in 10 miles, has relocated 10 miles, which include high profile companies like Toyota, Raytheon, JP Morgan Chase, Liberty Mutual, Boeing. So Dallas is one of the phenomenal market space to look and expand your model into. We also focus as tax and accounting business. We focus on full range of tax and financial accounting. We cater to various retail, professional, real estate, and technology businesses. We customize the full service for insurance, reinsurance, and company administration to a range of private and public corporate companies and clients. So this just gives you a little bit of idea of our leadership team. That's Sam Tucker, that's myself, Urvesh, who heads the real estate business, Vaishali, who heads the family entertainment center, radio, and the tax and accounting business, Dheeraj, who is an ex-Z CEO, who heads as chief operating officer of our entertainment brand. Muhammad Qasim works very closely with Purvesh in the real estate side. Sam Siani also works as a president of real estate side, and David Pagan acts as a legal counsel for us. So today, I would like to start before we even go to some of the investments we have or opportunities we have. How do you play today's market space? Where do I think current market space is headed? So I always say the stock market depends on what you are trying to intend to, or what is your intent. This could be one of the phenomenal market, or this could be one of the very bad markets. So you have to decide what's your strategy. Is your strategy to a long-term hold strategy, or is your strategy, uh, being able to use the volatility of the market to take advantage of this market space? If your strategy is to take advantage of the volatility of the market, this is one of the great markets. So if you're doing day trading, if you're buying and selling stocks every day, then this could be a great market. You can play the market either way. You can play the market on a lower side, on a higher side. At the end of the day, you can buy a call option and put option, either one, technically to get more opportunities and also protect your losses. I always recommend that, sometimes by doing day trading, it could be a gamble unless and until you are actually trading on the stats of the business or underlying, the fundamentals of the business. In my opinion, fundamentally stocks are a little overvalued. In the long term, you should see some correction, and before it goes to the newer heights or next heights. I always say that, eventually everything would continue progressing to grow. Like in 2008, stock market went, or the indexes went all the way down to 6,000 points. And then it went to raise again to 28,000 points, which is twice the last time highest peak which it had reached, which was 14,000 points. Today we have reached about 27, 28,000 points, and we expect that there should be a correction in near horizon. And that horizon correction could come from various space. COVID might not be the reason why you see, but COVID might be the reason why you see that this correction could occur or correction could improve. My primary effect today is, and if anyone has questions on some of those items, there is not a presentation on this thing. I want to make more dialogue before I go into the presentation of what you should look at, what alternative options are available. So today's market space, you need to remember that what could happen is that uncertainty of election depends on who gets elected, depends on how the stimulus gets approved. You would see a short-term market raise, but fundamentally, the problem what it has brought up because of COVID, a lot of small businesses are not surviving. Even a lot of large businesses are not surviving. To my surprise, I was at Stonebriar Mall very recently for shopping, and I saw that a very reputed brand, Banana Republic, where the entire store was stocked with all the thing. The mall owners had put a lock on the store, and the reason there was a lock was because they had defaulted on the rent payments. Now you need to remember that Banana Republic's parent company is Gap. What that really means is that Gap or Banana Republic is not able to meet their rent payments. There are many more restaurants in the same bucket or similar area. The fundamentally businesses which were weak, which were not well capitalized, which did not have ability to sustain this downfall, or which did not get access to some of the government funds, are in really big problem. And those projects, those real estate market are backed with CMBS financing. So you would see some softness coming in from CMBS financing, which is commercial mortgage-backed securities. If you really remember, we had residential mortgage-backed security was the main concern in 2008 and 9. Mortgage-backed securities are a $20 trillion market space in US. So what we anticipate is that if this vacancy rate increases next year, and COVID recovery might look like another 12 months, and if the business that cannot sustain through this, California Pizza Kitchen is another example of similar brand. Only 2 of the stores are available now in Dallas versus about 10 or 15. Fuddruckers, Luby's, I can go on and on. There are various brands that have closed their doors today. So if unless and until government takes some action to, spruce up the CMBS financing, today CMBS financing looks like a weaker area of the market space. So any asset, any commercial mortgage, which are not backed by CMBS financing, they would have a little bit better outcome. So what is CMBS financing? You need to remember that there are various financial structure or capital structures you can use to raise money. If your commercial asset is backed by a CMBS paper, which eventually was traded in the market space, if the underlying asset becomes weak, then you would start seeing that the effect of that would continue, and that effect would continue, would have a ripple effect of that. Now, nobody can time the market correctly. These are all based on the current information of my expertise into real estate and my expertise into, residential, commercial, and other sides of business, including, entertainment, and also some of my friends I talk in Washington. CMS financing default could trigger, and hospitality is another weaker sector, which I see, particularly hotels. Perfect group of business decided to exit out of the hospitality sector prior to COVID situation because we already had seen some weakness. So today we don't have a hotel portfolio on our segment, and we exited the last portfolio with 25% return to our investors. So we time the market correctly. That is very, very important in this market space, to time the market correctly, to make sure that our investors don't or are able to get the full advantage. Another very important aspect is that anytime you exit or buy, if you keep your benefit of tax efficiency, you would always see that you are able to get phenomenal value to yourself. Now, in this current softness of the CMS financing, your biggest challenge is what to do, how to play this market. Is the general market space incorrect? No. Dallas is still doing fairly good compared to other side because Dallas is growing at a stake of Northeast and West Coast. CMBS financing softness, which you see, might not come from Dallas area, or maybe little impact in Dallas area, but it would still have a larger broad scale effect in the entire market space. Remember that. At the same time, CMBS financing default is very serious to consider. At the same time, there was a documentary on Netflix about China. If you really see that, you'd be very interested to see that how there are certain Chinese stock which took place in the market space in a kind of a gold rush, which everyone was buying things post 2008 and 9 time frame, thinking that those Chinese assets would technically bring a lot of value. But technically, today those underlying assets, there are a lot of shell companies in Chinese companies, or maybe companies that are not fake or not valid companies. They might be fake underlying operations, which are in the market space. So again, the softness could come from a variety of sources. Also, the softness could come from the trade deals, which technically depends on who gets elected. Softness could come from another area, primarily is the tax changes or tax law change happening. As you know, that Biden side of the Democrats have already said that they intend to increase taxes. Now, tax increase always is very hard to judge. You might not see the favorable impact. One of the recommendations by Biden administration is that they would like to get rid of the 1031 exchange. If they get rid of 1031 exchange, that means people would not be selling their real estate assets. New assets would not be reinvested back into because of the 1031 exchange market drying up. That could have a significant downstream effect on the cash flows for the continued development in the real estate space. Second downfall which you could see is that they've also talked about increasing corporate income tax. Corporate income tax increase could trigger some of these companies to rediscuss and rethink that should the international development or manufacturing be continued, or should they bring manufacturing jobs back into US because of tax disadvantage? So there are a variety of reasons why these uncertainties could hurt in at least a short term in a next year, where some of these strategies are not decided or firm. Eventually the market would play and improve. So I always say there is a very simple funda of making money. When everyone buys, you sell. When everyone sells, you buy. A lot of people don't understand this philosophy. Today's stock market, everyone is still buying. I would say this might be the time to sell if you follow the same fundamentals. Real estate market, you might see some softness, maybe even more softness in the next year. First 6 months, it might be time to buy at that time rather than selling. So you have to find the opportunities in the strategic market during COVID times. We have to find safe opportunities for investors. Rent asset to operating business. So we also are looking always for assets that are technically rental and money producing assets. Now I want to go on a slide before that. Maybe this is a little bit not zoom. So I'm going to try to zoom this particular slide. Let me see if I can zoom this slide. One second, just bear with me while I'm increasing the font, because these fonts are obviously challenging even to me. This gives you a little bit, sorry about that. I think I started the presentation from start. This gives you a little bit about the fund performance of the prior fund which we had, or what we have done. We have done actually in real estate space, we built a retail building in Razor, which was exited in 2017. We projected an IRR of 20%, but we realized 34% to our investors and us on the project level IRR. Office condo project, technically in McKinney, we are now exiting that project at 12 to 20% per annum, and we had guaranteed 6% per annum distribution. So this particular project is today exiting at generating about 12% returns to investors. 36-acre land in Allen, we had predicted about 20 to 30% IRR. And today, we have sold this with an IRR potential of, one second, I think there is still a little bit hard to read. I hope you're able to read. So today that project is exiting with 40% per annum rate of return versus 20%. We have 30-acre land in Denison. We are expecting that to also generate a rate of return, which technically is going to generate a great rate of return, as far as the, the return is considered. Today, that is exiting in Salina with a 10% per annum rate of return. We have two other projects in pipeline, which we are expecting the rate of return to 15 to 25%, but we will see the project IRR would increase to more than 30% IRR or 25% average IRR. So these are the past perfect group of funds which technically have exited out. We have close to 11 funds. Out of that, 4 of them have exited out. 2016 or 2020, we are already exiting from fund number 6, fund number 7, and fund number 8. 70% exit is planned by 2021. Rest of the funds are today planned to exit in 2024 and 2023, which is our Alma Land Investment Fund, ALIG Fund, and Pasma Fund. Yesterday, we had a fund which we closed on that fund, and we were raising $4.5 million. This particular fund was very interesting fund. This fund was generating 12% rate of return, guaranteed fixed 12% rate of return, 8 to 12% return, plus depreciation benefit, which was average generating additional 4 to 6% from the depreciation benefit. So on an average, this fund was generating 14 to 24% return. And to our success, that fund yesterday was oversubscribed by, we were raising $4.5 million, and we have raised that fund to exceed $5.7 million. So that is amazing thing of that particular fund, which is exceeded its target, and that fund was closed yesterday. That particular fund was a fixed income fund. I would like to show one more fund which I'm working on technically. So give me 1 second, bear with me while I'm trying to share with you. So give me 1 second. Again, I would like to make it very interactive session. So guys who have question, please feel free to ask me on the chat window. I would like to explain you. I hope everyone is able to see my screen. You should see a skyline with a PDF. Please, if you are able to see my screen, if you can type on the chat window, that would help me understand that you're able to. Lee, please, can you confirm that if you're able to see the screen today? So yesterday we had this phenomenal investment opportunity, which I would also share with you guys. This particular opportunity was an investment fund where technically you could, 1 second. I would like to show you that opportunity first. So this particular opportunity, which we closed on yesterday, was this fund where we had 3 different classes of stock. It was a radio asset which we were buying, income producing asset from last 16 years with not a single default even in COVID market. Asset was appraised at $14 million. We purchased that asset for 9.5, and the rate of return on that asset was 8%, 10%, 12%. With depreciation, the rate of return was 12.30%, 15%, and 18%. And this unique fund had a very unique opportunity that they are able to convert their equity into Series A of Fanasia's equity stock, of the entertainment equity stock next year, or Series B potentially year after that, and Series C year after that potentially, before we go to or tap into an IPO. So that was an interesting opportunity, which also had potential to have an upside or ability to convert into pre-IPO stocks of Fanasia Network prior to going to IPO. And this particular fund was oversubscribed yesterday by about close to 30%. We raised about $5.7 million, which we only needed initially about $4.5 million. Now, I would like to share this exciting opportunity which we are working next on. I want everyone to understand that in this market space, the opportunities we want to work is we want stable income generating assets with an upside to it. So this particular asset is better than your CDs which you put in your bank accounts, and I'll tell you why. Because typically CDs up to $250,000 are backed by, government, FDIC insurance. And we feel that government is a stable person guaranteeing an asset. I agree with you 100% on that. US government is a very stable economy compared to any other economy in the world. So if you really see this particular asset, this asset is better than a CD, because who is backing this asset is again US government. This asset is a $160 million asset we are trying to acquire. We already have a commitment of $160 million asset. We already have secured a loan of $100 million or $110 million. We are raising an equity of about $50 million. This equity of $50 million, it is a VA clinic, is the tenant in this space. So VA, which is again United States of America credit. So VA credit is United States of America credit. So if you love your CDs and if you're confident with your CDs, you know that this is even a stronger thing, because CDs do have an upside protection of only $250K versus this particular investment would have an upside protection of about 100% because of US government is backing this big thing, which is VA credit, which is again United States of America. VA budget, $45 billion budget in 2001. Today in 2020, It is a $220 billion budget. They have 370,000 employees, 33,000 job vacancies, 1,200 healthcare facilities, and 172 medical centers. It is largest VA outpatient clinic in Austin. We are discussing and evaluating this as an offer. We are technically going to be buying this thing. It has a silver lead certification, a beautiful VA facility, which you can see the pictures. It is VA's largest outpatient clinic with 200,000 patients. It was constructed in 2013. We have leased for 13 more years with the potential to increase the lease after 13 years. We have technically a lease income of $12.4 million with an OPEX of $3.4 million with a net operating income of $8.9 million. And we have extra land to build additional building and rent it to additional doctors and hospitals, and possibly build a garage and even do more efficiency there. If you really look at the Austin's MSA, it is right near Tesla, which is moving in Austin. 2 million is Austin MSA population. The 5-mile radius of this thing, average median income is $49,000. Total population is 168. This just gives you a cap rate analysis of the asset in this time frame from 2015 to 2020. This gives you a little bit of an idea of other assets that were sold, which were VA or medical hospitals, which were sold across US at a per square feet price of $655, $742, $703. This is additional thing in different parts of the country at $860 to $761 square feet. This is the model of what we are proposing, that we will technically exit. We would enter in 2021 with a planned exit in 2033. But again, remember that it is backed by US government. So if you like CDs, you should like this thing. CDs, your rate of return is 1.5%. Here, our rate of return comfortably, which we pay cash on cash to investor, is 4% year over year. And there will be additional profit distributed at the exit, which we anticipate to generate a rate of return about 8 to 12% for investors at the exit. So total rate of return between your cash payout of 4% and 8 to 12% combined, you are talking about anywhere from 8 to 15% rate of return, which you'd say, if I was you, I would take a guesswork of close to 9 to 10% return on an average. This is a phenomenal option, which we are right now working on. This will again be fast moving opportunity. We will be raising $50 million equity, out of which we today already have commitment of $40 million in equity. So we will be generating about $10 million equity from our investors today. Rest of the equity, institutional equity, is already promised up to $40 million. Debt is already received. So if you like a stable form of returns, our goal is technically to bring you a stable investment portfolio. Like yesterday, we closed on an asset, which is a phenomenal asset. And we are able to generate 8 to 12% return. And every investment is different. Remember this thing. So you cannot compare. Every investment has a different risk parameters. Every asset would have different this thing. This asset is a little bit low in the returns because of the risk parameters. It is more like a CD. So your risk parameters are low. And that is why technically, you are going to see less returns. We still expect the returns 4% paid cash on cash every year, and additional 6 to 8% paid to you towards the exit. So this is a phenomenal rate of return if you like the safety and assurity of an asset. I would like to take questions now from everyone on what do they think about this rate of return compared to this thing. And I would like to ask what their questions are, what their interest is. All questions are fair questions. So I recommend, I think there's a question on the thing. Okay, what you can do is, Subha, what you can do is you can drop off, send an email to info@perfectdash.com or salesteam@perfectdash.com, or you can send a message to my cell phone at 214-454-7230. I'm writing that thing on the screen today, info@perfectdash.com, or text me at 214-454-7230, and I'll connect you to the right people. Or you can send an email to salesteam@perfectdash.com, or you can also reach out to Lee, who is our manager of the team, and you can text him at 214-576-6439. Again, this opportunity which I just discussed would also be fast moving opportunity. Typically, opportunities like yesterday are oversubscribed. So if you have an interest, if you like the safety of the funds, this is backed by US government. I don't think you can do anything incorrect here. So this is one of the phenomenal opportunity which you can avail in this market space, guaranteeing you your rate of returns and guaranteeing you a phenomenal outcome. My name is Sam Thakkar, Group CEO of Perfect Group of Companies. Our goal is two things. We don't give you or bring you opportunities which do not make sense, or we do not bring things which we don't invest our own capital into. Again, I thank you everyone for joining this afternoon. We would come back again and discuss more about this opportunity. Next week's presentation is going to be a very important presentation with 25 slides discussing two important things. What is the year-end tax planning you can do before end of the year? This last quarter is very, very important for someone on W2. So I'm going to be talking about tax planning, and at same time 3 o'clock. And I'm going to also be talking about what you can do to invest into this opportunity. I would, just send this email, Subbu, and we will share with you the presentation. Thank you very much for everyone for joining. I appreciate everyone's, joining this afternoon and spending time with me. Our goal is to technically keep this presentation short and sweet, precise, giving you all the information you need, and at the same time add value. Again, this is Sam Thakkar signing off this afternoon for today afternoon's webinar. Looking forward to talk with you again next week on how to cut your taxes in half, even if you are W2, owner, or if you get income on W2 or business, and at the same time, what you can do to technically maximize your value and how you can invest into this opportunity which we are bringing, which is gold standard opportunity, better than technically CD would be. CD is still guaranteed only up to 250K. This opportunity is guaranteed by US government without a cap of 250K. You cannot go wrong in this opportunity in one of the fastest growing market of Austin. Circling back with you next week, same time. Thank you very much. Hope you guys have a wonderful weekend, and I appreciate everyone joining this afternoon and spending your important time with us, and hope I was able to bring something exciting to you. And we'll discuss a lot more things next week. Ali Jivani ji definitely would send you this presentation and your email address. Again, thank you very much for joining this afternoon. Thank you.